Namaskar, good afternoon. You're watching Closing Trades on ET now. It's last 1 hour of the trading session, trading week, and it's ending in a bit of a somber note. And I say that because after conquering the 21,000 mark on the Nifty, we have given up our 120 points, holding on to 20,900, but just around that mark. Of course, if you look at the week gone by, it's been quite smart for the Indian markets. In fact, it's the biggest single weekly gain that we have seen in almost a year. So that's something to be positive about. In fact, Nifty has been advancing for 6 consecutive weeks. It's the longest buying streak that we have seen in almost 3 years. So that tells you the kind of big momentum we have seen this week itself. Almost 800 to 1,000 point rally scale within 7 to 10 trading sessions. Nifty mid-cap, however, today is in the red. Right now, it's tracking a red close. And remember, this will be the first close in the red for mid-cap index in over 25 sessions. So finally, that gaining streak that we have been seeing in the mid-cap seems to be broken today, a 0.5% cut there. Nifty Bank also deserves a mention. It's 4.5% higher for the week gone by, and that's the best weekly gain that we have seen on Bank Nifty in a couple of years. So going good for the market. It's ending on a bit of a somber note, but consolidation is also good after the kind of rally we have seen.
We are absolutely catching our breath, hopefully, for the next up move forward. But sugar stocks, they continue to be in the news. Ethanol production from BSE molasses is still allowed temporarily. The curb in supply of sugar cane juice as well as syrup. The government is now encouraging alternate sources for ethanol production. The word that we're gathering from the oil secretary is that they're confident of meeting the ethanol blending target. So sugar stocks will just come up for you on your screens. They continue to reel under pressure. Still down about almost 4% on at least Balrampur Chini. But you also have to factor in the run-up that some of these pockets have already seen and the over-ownership perhaps as well. Orchid Pharma, that though on the other hand is on a tear. Investec initiated a coverage with a target price of 800, saying that they're set for a strong growth for the next 3 years. The management is expecting a turnaround and they're liking the story. GMR Airports, that's the other one. A sizable block deal. 12% of equity has changed hands in a single shot this morning. That stock is holding higher by about 13%. And of course, the volumes as well, given how large the block deal has been sizable. Not just that, it doesn't stop there. There was a 1% equity changing hands in Zomato as well, and almost an 8% block deal on 5-star business. So these are a bunch of stocks which are in focus. But let me now welcome on board Kunal as well as Naresh and Shibani Sarkar Kurian as well in just a short while from now and find out what they're making of the market move. Kunal, hi, afternoon. Closing this historic week in a sedate way. Next week, you think we'll back to the winning streak?
Well, I think it's a bit of a profit booking on the indices. I think there's not much of a change in terms of the way in which the markets have approached. I think it's been a fabulous week for the index. We've gained substantially for both the indices, Nifty and Bank Nifty. And I think it could be a good time to try and take some chips off the table. But the good part about the market so far is that even in the last half an hour, when the selling was getting a bit more aggravated, you still had large cap names like L&T, ICICI Bank, etc., which are trying to come back to their intraday highs. So that itself indicates that it's not that everything has been going through a corrective phase. The markets are going through a churn, and hopefully this time around the large caps could make a stronger comeback.
Okay, large caps are making a strong comeback, and today, of course, the comeback has been from the IT pack. Take a look at that 1.5% move. HCL Tech, LTI Mindtree, Persistent, they're all doing well for themselves, and even for the week gone by, the IT index has been up around 2.3%. Naresh, what's your view on IT and the banking index now? 5% gain this week?
So IT as an index is almost close to the Nifty IT sector index is close to a breakout, and if this sustains, we could see some more follow-up action. So stock-specific action has been very good. So if you look at HCL Tech, you have it at an all-time high. You're seeing a TCS come to a 52-week high. You're seeing a LTI Mindtree. So a bunch of names in IT are showing strong momentum. So this could possibly mean there is another 3-5% upside, at least on the large cap names, and maybe a 8 to 10% upside in some of these names. So IT as a sector could see some follow-up action over the next week.
Okay, IT could see perhaps some more follow-through come by next week as well. Decent amount of move is what you've seen there. Still haven't resurrected ourselves from the sugar moves. Kunal, glimmer of hope there, or you think there's further downside before things begin to look up?
In fact, for the first time, I was actually seeing a good amount of short built up into these, the sugar, specifically for the likes of Balrampur Chini, where right from the time when the stock opened, I think it was at 410 odd levels. The stock saw a mild bit of bounce back, but then it got sold immediately. And even in the mid part of the session when the markets were going through a bit of a chop and churn, the stock continued to remain under pressure. And now that I think it's come back towards 390 odd levels or sub 390 mark on an intraday basis. So that itself indicates that there is more pressure into the stock price. I would be a bit wary of building on long positions over here. And the bigger concern now for Balrampur Chini is that the stock has fallen below the 200 moving average. So maybe another couple of days of closing below those levels, we could see the selling a bit more aggravated.
And take a look at Praj Industries as well. That's quite a bit of fall on that one, almost a 10 to 11% fall. And this week itself hasn't been too sweet for the sugar and ethanol play. So we are seeing a bit of a bitter pill being taken by some of these names as well. But Shubhani Sarkar Korean is also with us. Shubhani, what's your view on the market? It's been quite a meteoric rise that we have seen in the index over the last 7 to 10 trading sessions. Do you expect this to continue for the rest of the year and see that Santa Claus rally strengthening, or it's time to probably hit a pause and recalibrate?
Yeah, hi, good afternoon. So I think the stars have clearly aligned for equity markets. So post the state election verdict, it is very clear in terms of policy continuity, especially post the central elections. And therefore, the markets have clearly cheered that as well. But apart from that, I think what is really a standout for our markets has been growth. From a GDP growth perspective, we've seen that numbers have been revised upwards, and therefore India now continues to be among the fastest growing regions in the emerging market pack. The second most important factor for the market, apart from the policy stability and continuity of the government, is the fact corporate earnings has been holding up extremely well and has been very, very broad-based across sectors. And therefore, for FY24 and 25, it is likely that we will possibly meet consensus estimates or maybe see some upsides there. So I think all these factors have been playing out for markets. But as you rightly said, when we look at markets, we can't ignore valuations. Our belief is that from a market perspective, large cap valuations continue to be fairly reasonable in line with long-term averages. We've seen very steady earnings growth for the large cap pack as a whole, which has not reflected in terms of the multiple re-rating as we have seen in case of mid and small caps. Our belief is that both absolute and relative valuations for the mid and the small cap segment, specifically the small cap segment, is above long-term averages. And therefore, at this point in time, while we remain structurally positive on the market, our preference has been for large caps over mid and small caps, and that preference continues.
Okay, that preference stays right now. That's the overall construct of the market. Shubhani, you have to discuss what you made of the policy takeaways as well. You know, especially the growth guidance, the commentary coming in around inflation. What does it all spell for equity markets? And the fact that they're not going to go easy when it comes to, the rate trajectory.
Absolutely. So I think the monetary policy as outlined today is a continuity of the good work that has been done over the past many years. So over the last few years, what we have seen is both fiscal and monetary policy have come together. And that is now reflecting in the fact that our GDP growth continues to remain significantly higher than many other economies and the large economies of the world. And in fact, even RBI has upped their GDP growth guidance. So growth remains strong. From an inflation perspective, inflation has moved into the range that RBI talks about. But I think clearly structurally, RBI would want inflation to move to that core level of 4%. And therefore, that is their target from an inflation stability and financial market stability perspective. Our view is that rates will possibly be at current levels, and therefore it's more of a pause. A lot would also be determined by what the US Fed does, and therefore rates in India from a policy perspective, while may not move higher, but will clearly follow the path that the US Fed takes, and therefore it's likely to be a prolonged pause as of now.
Okay, prolonged pause is what we are expecting in terms of the monetary policy action, but take a look at some of the buzzes as well. It's GMR infrastructure, which is higher by 13%, and IREDA, one of those recent listing, continues to gain ground, so it's 10% higher yet again today. And from the real estate pack, it's Sobha, which is fairly excited, and then Prestige Estate as well. What's your take on real estate right now, Shubhani, and would it be prudent to play this directly through the developers, or it's better to go towards building material, home improvement, consumer durables and the likes?
Yeah, so real estate has been one of the key drivers of the entire growth revival that we've seen apart from infrastructure, capital goods, manufacturing. So what has worked and what has changed in terms of the real estate space has been clearly the inventory correction that you have seen in the system. and that has meant that the overall pricing has also come back. Secondly, there has been significant amount of consolidation because of the policy changes that have taken place on the real estate space, which means that the organized larger developers have gained market share, and that bodes well for the listed space. Incrementally, we do believe that real estate demand is likely to remain strong. And therefore, if you look at the data that is coming through in terms of new launches and pre-sales, the data remains strong. But however, the sector has seen a sharp up move. And therefore, from a valuation perspective, one has to be a little selective in terms of the stocks that one chooses in the sector. As you rightly pointed out, one other way of playing the real estate thesis and as a theme is the entire home building and the building materials space. So segments such as cement, tiles, the entire building material pack, including some segments of consumer durables, etc., would possibly be a better way to play the entire real estate thesis, given current valuations in that segment.
Shivani, though, what about the larger infrastructure theme? While, of course, the go-to name here continues to be L&T, but for instance, an airports play like GMR is holding out very, very smartly today. Of course, there's been that sizable block deal as well earlier today. And of course, whole host of ancillaries within this pocket too.
No, absolutely. Our basic thesis has been that the entire manufacturing, industrials, and infrastructure is not just a one-year theme, but it is a multi-year theme. Now, for instance, if you looked at what's been happening over the last few years, growth in the space has been largely led by public capex and government spending. At the margin, given the kind of capacity utilization levels that you're seeing across a few industries, there are signs of pickup in terms of private sector capex. And that is also getting reflected in terms of the order flows that you're seeing and the order booking. Across the space, in fact, even if you looked at the last quarter numbers, order inflows have remained robust. And therefore, what we believe is that the run rate for growth remains extremely high. So segments such as, for instance, the core infrastructure space, defense, railways, water, power, power T&D equipment, airports, all of that remains fairly buoyant from a growth perspective. One has, of course, got to keep valuations in mind. This segment has seen significant run-up in terms of valuations. But valuations aside, as a theme, this is a theme that we believe that will continue to play out, especially now incrementally with some of the private sector capex momentum starting to play out. It will possibly be more visible over the next 18-month period, but we believe that the tailwinds are clearly there for growth to pan out over the next few years.
So that's a positive view coming in on the infrastructure space. The SIP data is just trickling in, and we understand that the total stands above 17,000 odd crore rupees. So this is the first time that the SIPs have gone past the level of 17,000. Just last month, we had seen number very close to that figure, 16,900. So not a big surprise coming in. It was expected to inch higher, and given the momentum that we are seeing in the market, there's still a lot of FOMO feeling that a lot of retail participants have. In fact, Shivani, what would be your advice to people who are having that FOMO feeling? What's the best way to play the market right now?
So I think what we keep telling our investors is that timing the market is extremely difficult. Give time to the market, and therefore have a very disciplined approach in terms of how you invest in equity markets. SIPs clearly is one of the best ways in terms of investing in the markets, which allow you to invest over a long-term period without having the fear of trying to time the market, which is extremely difficult for anyone to do. And therefore, keep in mind your entire asset allocation strategy, keep in mind your investment goals and horizon, and be extremely disciplined. And SIPs continue to be one of the best ways to invest in equity markets.
Clearly quite visible in the SIP data that we were just talking about. In fact, the overall AUM for the entire industry has gone past the mark of 50 lakh crore, and that's what the SEBI chairperson was also saying today. And to add to that, they are willing to do the T+0 settlement. They say that they're all ready for it, and hopefully very soon that too will be implemented. Even if you look at the flows in the small cap funds, it's seen an inflow of almost 3,700 odd crore rupees. So the strong inflows continue there. For mid cap as well, for 10th straight month, we have seen decent amount of flows coming in. Of course, we'll have to take a look at how the large cap category is also performing, because interest seems to be shifting back there. But taking a From the SIP data, it's an ET Now exclusive that we are bringing for you, and sources tell us that SpiceJet will have not one but two investors coming in on the board meeting, which is scheduled for December 11th. Sameer, my colleague, is joining us with these exclusive details. Sameer, yesterday the stock was excited, was up around 20%, and now you're bringing in incremental details as to who those investors can be.
Cash-strapped SpiceJet airline is likely to get a lifeline, because what we are getting to know from our sources that not just one but two investors have shown keen interest to invest in airline, and the move of SpiceJet airline to raise fresh capital for the airline is bringing some result. Formal announcement or the decision is likely to be taken in the next board meeting, which is going to take place on December 11th, next Monday. This board meeting will take place, and this proposal of the two investors to invest in airline and the move to raise fresh capital is likely to get a formal approval. And this could be to the tune of around rupees 1400 to 1500 crore. The first investor is likely to invest by around 1000 crore, and the second investor that we are picking up from our sources has shown interest to invest around 300 to 500 crore. So a fresh capital of rupees 1500 crore is likely to be raised by SpiceJet airline, and this fresh capital will be utilized by airline for meeting its financial obligations, like payment of the salary. Pending salaries are there, so that will be done. Airline is also looking to revive the grounded aircraft and to bring back to its fleet size. So if the fleet size expand, that will help the airline to normalize its operation. We have seen in the recent past that the airline was hit in terms of operationality. Multiple flights were facing problem. So that all problem might get some sort of resolution with the fresh capital. So this is one of the big move, or a sort of a lifeline, which the airline is likely to get. Fresh capital they are going to raise from the two investors, and a formal announcement we can see in the next board meeting, which is likely to take place on December 11th.
Thanks very much for highlighting those exclusive details. That's the news on SpiceJet. We'll take a very quick break on that note. When we come back, focus on where the market is closing in for this week. Okay, the SIP inflows, which have managed to cross that 17,000 crore mark for the first time ever. That's the November data highlighting the same. Let's take that conversation forward. We have with us MD and CEO at Mahindra Manulife Investment joining in right now. We've got Anthony Heredia on the show. Anthony, hi. Great to have you today on ET Now. While it comes as no surprise that the SIP inflows are at an all-time high, but is there any bifurcation here? Are the inflows more skewed towards mid and small caps as opposed to large cap schemes?
Hi, good afternoon. No, I don't think the SIP flows would be skewed. To some degree, you would argue that lump sums tend to have been in small and mid cap funds over the last 6 months. But I think SIPs are built over a period of time, right? So I think SIP flows would be much more evenly distributed between multi-cap, flexi-cap, as well as small and mid-cap. I would admit, though, that I would say the proportion of new SIPs being opened in small and mid-caps in the last 6 months have been higher. And that's no surprise, like I said, because lump sum investors have looked at small and mid-caps given recent returns. But again, we're seeing that trend change a bit in the last month or two. I think flexi and multi-cap funds seem to be much more things that investors are looking at.
There's a bit of a shift that you're already witnessing. There is a focus coming back to the large cap category as well. But what's your sense in terms of how overall momentum is on the ground? Do you think there's some sort of caution which is needed in the markets right now for retail investors? Or do you think the 17,000 is likely to become 18, 20,000 crore soon?
So I can't comment on how soon, but I'm pretty sure it will be 20,000 in the next 6 to 9 months. That's given the perspective that most clients understand that SIP is a great form of saving, translating into investments. I think caution I would advise to investors who are having timeframes which are lesser than 2 years. To my mind, investing in equity, irrespective of your valuation view, makes sense when you have a time frame of 5 years and more. If you have a time frame of 5 years and more, I think the need for caution is much lesser. If you have a time frame of 18 to 24 months, then I certainly would tell people you need to be cautious and think very deeply about where you're investing.
The other thing I also wanted to, talk about is some of the sectoral and thematic funds, right? Because we've seen how the street has been so charged up about the entire PSU theme. Individual, sectors like banks, of course, continue to find favor, and they're also pegged as the sector for the next 6 to 12 months. Any specific observation that you've made?
So I think the observation I would have is the following. I think the biggest premise around investing in equity in the long term in India is just the dramatic change in our economy that's going to take place over the next 5 to 7 years, right? There's conversations around becoming the third largest economy, conversations around per capita moving from $2,500 to $5,000. And then the natural next question is, if that happens, where are the next set of opportunities going to come from? And then trying to put that format in terms of themes that will play out more than the average market, etc., then become translated into NFOs of thematic funds that people get more excited about. That's just the nature of how retail investors sometimes play it. Diversification sometimes is too boring, but actually it makes more money in the long term. I think the thematic fund flows that you're seeing is a reflection of the broader theme. Where is India going to be economic terms in the next 5 or 7 years? What's the opportunity set going to be because of that? PSU is one of them, manufacturing is another, just the sheer amount of innovation and disruption. So therefore, themes that play on that. So I think it's a reflection of that broader outlook on the economy.
Anthony, before I let you go, a leaf out of what the RBI governor said today. Of course, the overall, e-mandates for UPI, etc. have been increased for mutual fund investments as well to 1 lakh rupees. Do you think that would be a major fillip as well?
I don't expect it to be. It's just another convenient form of investing into funds. But at the risk of sounding like I'm batting for the industry, I think the paperless format by which you can digitally invest in our industry is already pretty vast. But obviously, the fact that you can now do UPI up to 1 lakh effectively means that theoretically people who are doing larger SIPs perhaps look at a UPI route as opposed to the e-mandate route. But I would say this, that between the current digital payment options that are available for clients to buy SIPs or lump sums into funds, this is another addition that makes it more convenient, but I don't think it's a significant change to how flows will be.
Anthony, great to have you with all that insight. Good speaking with you.
Good speaking to you as well. Thank you.
Okay, let's take some closing ideas on that note. Of course, we'll thank Shivani as well. But Kunal, any closing strategies?
So from the IT pack would go Infosys as a buy. I think, again, interesting breakout. The stock breaking past about the 1475 to 1480 hurdle on the spot levels. Looks attractive for another 70, 75 rupees on the upside.
Naresh, what about you? What's the closing trade idea you have for us?
So that would be ICICI Bank. The stock has been holding on around that 1,000 mark, which was the previous high back in August. And there are 3-4 attempts done here in the last 6 months. Relative strength also, and finally looks like it is taking leadership in the banking space. So expecting this to break out over the next week.
Okay, let's take a very quick break on that note. When we come back, we'll track the last half an hour of trade this week.
Jump up. It's 20,960 on the Nifty, still not close to the highest point of the trading session, but we are making our way to that mark. It was IREDA that was holding up okay. Now it's a bit reversed. You also have REC, which is actually seeing a bit of a spike. So let's put the spotlight on that. If that's the case, it's showing a bit of a perk up. So it's 2.5%, not anywhere close to that 10% move that we are witnessing on IREDA. Aptus Value Housing is also in focus. We have Ujjivan Twins, which are doing okay. And then RBL Bank 2 is green. What's on the losing side is the sugar names. Apart from that, Poly Medicure is in focus, and some of the Adani group of companies, Transmission, Power, Green, Wilmar, are taking a breather after that massive run-up that we have seen in the week gone by. In fact, Naresh, I wanted your view on GMR Infrastructure, which is higher by 12%, and then of course on the losing side, Adani group of companies.
So GMR is something which I continue to like. The stock gave a earlier breakout around 59.60, was slowly and steadily moving up. After today's bull deal, the stock has finally crossed into a new all-time high. So 66.67 was the top in August, September. So strong volume, strong breakout. So it's a buy on dips from here. It's just that at 68.69, stock up 10-12%. The risk reward is not great, but given the previous highs were around 66.67, so any retest of that zone is a buying opportunity. And the stock could continue to trend up higher and go towards the 78 to 84 mark.
Other buzzers in trade, and GMR India, of course, is holding out well. But the other one, Kunal, RBL Bank has been quite a consistent mover this week.
Well, yeah, I think it's done exceptionally well. In fact, the stock was on the back of that negative news flow had fallen sharply to, I think, 228, if I'm not wrong, to 25 to 28 levels a couple of weeks back. From there, I think it's been almost a V-shaped recovery. So trying to break past about the previous swing highs or from the top when the stock had fallen down, I think requires a lot of volume push, and that's been exactly the pattern for RBL Bank. I think now the stock seems to be set for a higher targets. So I think maybe closer to 285 to 90 could be a target range for RBL Bank next.
Let's take a look at some of the FMCG plays as well, because they haven't participated in the recent rally that we have seen. And I think we did have a conversation with Mr. Sanjeev Puri of the ITC Major as well as I think Mr. Godrej from that Godrej Industries Group, to get a sense as to what the situation is on the ground in terms of demand trend. And we should pull up those buys, because it seemed like they are saying that rural recovery is underway. You are seeing the initial signs, but it's not a full-fledged recovery. Listen into what they had to tell us.
Till recently, rural demand was poor, but it seems to be picking up now. I think the Rabi crops are likely to be good, and that would ensure that there is good rural demand. Well, for tomorrow, it may be too early for a reduction, but I'm very hopeful that at the next meeting, there will be a reduction.
You see, it'll be a journey in which we will see the complete pickup. I think we're already starting to see some green shoots of recovery. And with passage of time, you see the inflation rates are also becoming more moderate now. So with some more time, I expect that this will pick up. The risk, of course, is the weather events.
Okay, let's welcome on board Sunil Subramaniam as well. Sunil, you heard the commentary coming in from the India Inc. Major, talking about how rural recovery is underway. Which stocks and sectors do you think are best placed on a risk-reward basis where there's still value on the table?
On a sector basis, I can't talk stocks, of course. I think the consumer goods FMCG pack is a good play, and discretionary also, because you saw a good festival season demand. So I think that, one of the key factors there to understand is that we talked about vegetable prices spiking both in August, September, and now November, right? So on the one side, when inflation affects the urban consumer and the thing, it benefits the farmer, right? The rise in prices, because their input costs haven't changed. So that's why I think consumption will be the overall winner from this pack. And if you notice, over the last year or so, it's been the urban premiumization that's happened. That's why the urban walked away with a lot of it, right? But in the rural, you'll have the more mass market, bottom of the pyramid consumption coming in. So entry-level cars, entry-level motorcycles, and other two-wheelers, those and all, I will see that there will be a surge in demand in the coming. Plus, bear in mind that election season, so government direct benefits and transfer of subsidies will all come into bank accounts, money gets spent. So you will see that also largely in rural India, because that's the vote bank, right? So you have 70% plus living there. So they'll get a lot more money in their hands, right? So I would also then argue for, liquor stocks also to kind of get a boost in demand during the election season. So I think overall, broadly, I would say consumption is the best pack. And at the back of it, PSU banks are the best position, both to get the inflows and also to lend into the rural economy.
Somebody is in the Friday mood already, Sunil, talking about the ethanol stocks being lined up. But let me put you on the spot there and ask you, if you had to put fresh money to work, would it be towards the stock and theme facing the rural economy, or would it be urban consumption? Because, of course, that's already doing strong. Will you continue with the momentum there, or go towards rural theme stocks right now?
I'll reallocate a little more towards rural because market has been having a surplus of liquidity except for the months of September and October when FIS pulled out. Prior to that and post that, FIS have been putting money and mutual funds have been consistently getting flows. Even today's data showed that 15,000 crores net flows. So what happens is that because of the consistent buying, the focus of the market has been on urban as well as infra. So I think to that extent, bottom of the pyramid consumption, rural-oriented consumption has not got the capital allocation, which it in the normal course would have got because it's the focus has been on infra. So next few months, I expect these consumption-related stocks sector earnings to be better and some amount of capital drag to come in there. So that capital will then push up the prices there. So I think from a tactical point of view, till the elections, I see that rural-oriented consumption is probably going to get a little more capital and hence you would make a little more money. And so tactically, it makes sense to allocate a little more into that at this point in time.
Right. And Sunil, you think the other theme or rather an extension of the point that you just made could also be two-wheelers and maybe reason why the likes of Hero MotoCorp have been doing so well of late?
Yes, I do think that two-wheelers, there is a pent-up demand, because there was a postponement of those over the last, since COVID itself, the expectation of a sharp jump didn't happen. But you also have the EV presence there in the two-wheeler segment coming in. So I think that is also expecting to expand the market. And, when the rural economy does well, that's when people, because these two-wheelers are not necessarily passenger vehicles, they're actually used to transport goods by the rural population, small bags of wheat, milk, all of these are transported through two-wheelers, right? So I think that definitely the rural economy's recovery will see a boost to the two-wheeler and maybe the EVization would also give a boost to that space.
Tactically speaking, Sunil, how should one place themselves for the IT sector right now? Just stay away because there are better opportunities, or just, again, from the risk-reward perspective, it's the most attractive right now in the sense that it hasn't run up?
Yeah, so to the extent that everybody has to allocate a certain component to safety space, right? You can't put everything in high risk, high reward. IT represents, I think IT has corrected a lot and the overall outlook not being great, they haven't got the flow of capital. But they can't go down much because their earnings are fairly stable. See, IT is not cyclical, right? While it went up post-COVID, the fact is that their business growth has always been hovering around the same levels. So there is a safety in that certainty of the growth. So I would say that to the extent that as an investor, you need to allocate to safety. Number one, IT should have formed a part of your pack. Number one. Number two is that you see passive flows when they come in, why everything in the index. So to the extent that IT stocks are a significant part of the index, they will get buying support from FIIs as well as from domestic provident funds and institutional players who tend to allocate into passives. So remember that they won't fall much. So that's where I feel that as a safety component, IT still has a role to play. Maybe not yet as a growth sector, but definitely from a safety sector. So lesser risk, obviously reward will be lesser, but the risk reward equation at a smaller level will still be worth allocating capital to it.
Sure. Okay, that's the take coming in IT. Kunal, you also believe that, outside the list of KPIT and Persistent, which perhaps have been one of the best IT performers year to date, one can broaden the list?
Well, yeah, I think I strongly believe that it's time for large cap IT stocks, to be looked into because these stocks are now showing a credible kind of a bounce. So, we were earlier discussing the likes of TCS and Infosys, how the charts have been a bit more stable this time around. These stocks had not fallen, or broken below their September 2022 lows. And from there, these stocks have managed to absorb a lot of negative news flow, but still consistently make a new high. But I think the other change which has also happened are the addition from the large cap IT name is Wipro. And the last, I think 3 or 4 weeks, the stock has done reasonably well from 380 to 422. The good part is that the volumes in the last 2 weeks for Wipro have been on the much higher side, both on the cash as well as on the F&O side. And this clearly indicates that not just on a delivery basis, but even from an open interest perspective, this seems to be a strong addition of long built up for Wipro. So this also indicates the fact that even the weakest of the stock from the larger cap IT name is making a comeback, which means that the sector is going through a possible turnaround.
Okay, a possible turnaround, but the turnaround right now is visible on the banking index, and we should pull up the candlesticks for that one to see what kind of buying momentum is visible on the Bank Nifty, because HDFC Bank is sitting with a gain of 1.5%. Take a look at the up move on ICICI Bank, Axis Bank, Kotak Mahindra Bank, so all of these private banking names is something which is seeing a bit of a green tick across the board. Naresh, come in on HDFC Bank, ICICI Bank and Axis Bank. Out of these three top private banking names, which is the chart that looks the most attractive?
So the first preference is ICICI Bank, because that is the one which has come to the previous 52-week highs and all-time highs and making a fresh breakout. Second is Axis Bank. The only reason it is second is it has already moved up a bit. So the previous high for the stock was 1050. The stock is already at 1130. So relatively, the risk reward is better than ICICI Bank. And then last comes HDFC Bank, because it still has a lot of resistances around that 1700, 1750 mark. Now, this was the high when the merger got announced. This was the high back in 2021. This was the high in 2023. So that would be a tough resistance to cross. So at 1655, you have a bunch of resistances at 1700, 1750. So in that sense, ICICI Bank is the new leader. Axis Bank is the existing leader. So these two names look very promising. And the last one would be SBI to watch out for.
Okay, and before we let you go, Sunil, a last question to you on the banking space. What is your favorite there in terms of private versus public? How do you think things stack up, large cap versus mid cap?
So again, from a safety perspective, it's still large cap private. But if you want to look for growth, and I again talked about the fact that money and liquidity will flow into the economy, is the PSU banks who are got the branch network to receive that money. Most of the direct benefit transfers of subsidy and all of that goes into these kind of banks, right? Even in the Jan Dhan Yojana, they were the ones who expanded. Second is that I see that the growth aspect, right? If you look at it, it's gradually shifting from retail to corporate in the lending space, right? Because capital goods story is rising, private sector announcements are happening, government infra push continues. So PSUs are much better placed to lend into corporate, into the SME segment and to the large projects. So I would say that the lending group growth of the PSU banks would be much better. And the NIMs are also better in corporate lending at these SME space. So good quality public sector banks would be my growth pick. So from a safety, it will be a large cap private sector banks. From a growth, I would say good quality, again, large PSU banks would be the pick, because they are well capitalized, well managed, and you got to be, definitely betting on growth there.
Okay, Sunil, great to have you on the show as always. Thanks for taking the time out. Naresh, let's revisit some of these banking names as well with you. You think merit remains in looking at these larger private sector banks which haven't participated up until now much?
So absolutely. So in the near term, you have a lot of resistances for Kotak Bank and HDFC, but they are still 3-5% away. So there is some more upsides. But clear leadership has been made. You have Axis Bank, which did not correct much and has now become the leader and has moved 5-8% higher from the all-time highs. The next one, ICICI Bank, is coming to 4. And then finally, you have State Bank of India, which has attempted that 600, 620 mark multiple times over the last 1 year. And on the downside, has made a range of 550 multiple times. So that could be a huge breakout going forward. And if SBI, ICICI breaks out, the ideal target in this case would be 10 to 20%. Given their last ranges. So structurally looks pretty promising, banks as a sector, and then SBI, ICI, Axis as a triad.
Point taken. It's a sugar stock that continue to see quite a bit of beating. In fact, we did speak with a sugar analyst earlier in the day to try and get a sense as to what the verdict is on the street, because there was a bit of a confusion regarding which contracts will continue, which will get over, etc. Let's listen in to the analysts have to say, because overall it seems like the stocks are still coming under pressure. You have Sri Renuka Sugar, which is down about 6%, Praj Industries down 11%, and a lot of other sugar names continue to say see a bit of dropping. In fact, let me take it across to Kunal as well. Kunal, I think you did answer a question about the sugar stocks, but is there any stock which we would look at buying on dips now?
Well, I think I'll probably look at EID Parry as one of the names to, it's a bit more attractive chart pattern, because the stock had already gone through a sharp correction, 6-7 months back, or maybe I think start of 2023, when from 660 levels, the stock had corrected or fallen back towards 460 mark. In this leg of rally, the stock is just come to the midpoint of 530, 535 after that 220 point correction. So that itself makes the risk reward a bit more attractive. The concern with the other names, as I mentioned, the Balrampur Chini, etc., is the fact that these stocks are trading below their long-term moving averages. So we'll have to wait out for maybe a couple of days, try and see if these stocks making a comeback and sustain about the 200-day moving average. That could be a point of a turnaround for these names.
Okay, in fact, listen into what Prashant Biani had to tell us with respect to how the sector will be impacted on account of this news flow.
The contracts which have been signed will now be lapsed with immediate effect for juice-based ethanol, with the caveat that whatever is the existing stock lying with the sugar companies, that might be taken up by the OMCs, but production needs to stop immediately for juice ethanol. For B heavy ethanol, till the time we have the existing contracts, till then supplies of B heavy ethanol will continue. And post that, for subsequent tenders, it will only be C heavy ethanol, which OMCs will take.
Right, okay, that's the take coming in on sugar. Seems like some more pain before any stability return anytime soon, and I think that's really going to be all dependent around the news flow. RBL, India Cement, Z, REC, they're the ones which continue to power ahead. And Kunal, just when you think that maybe the rally on PFC, REC is going to stall, they continue to bounce up.
Yeah, I think it's been one of the more trickier stocks because time and again these stocks have gone through a very strong breakout. They've hardly seen any major correction. In fact, in the last 3-4 days, the the pace of rally had paused for these stocks. So I think PFC REC, for example, I think had made a top of 408 and the bottom closer to 392. So I was expecting the stock to get into this range action. So for the last 2 or 3 days, the stock was getting into this 10-pointer, 15-pointer range. But I think now, hopefully, if the stock breaks past about the 408 mark, we could be looking at a fresh breakout for REC, and similar would be the case with PFC.
Yeah, and let's not forget IREDA for the day, which is up around 10%. And in fact, this week gone by has been rather kind on not only the Adani group of companies, which are up anywhere between 20 to 50% the week. In fact, Adani Transmission is up 64% in the week gone by. Adani Green 51% gain. Those are the levels which are coming for me on the screen, at least on a week-to-week basis. So 51% gain there on Adani Green. And the other sector is power. Look at a move on Tata Power this week. Fairly healthy between that 15 to 20% range. CSC was the other one with a gain of around 20%. And then, of course, the smaller names from that basket also participated. What's your view, Naresh, on these power stocks, the power utilities and generators, that is CSC, Tata Power?
So both these names have already moved up quite a bit from the time they gave a breakout. So the breakout in CSC was around 92, 96 levels. The stock has moved up to 120. 275, 285 was the breakout for Tata Power. That has also moved up 10-15%. So after the move, I would expect some bit of a pause. But if we have a medium-term outlook, the charts are pretty positive. So one should be waiting out for a dip here to actually enter and continue to hold on to the position. The trend is strong. We've seen a 2-year consolidation in Tata Power, almost a 5-year consolidation in CSC. So such breakouts can last longer. So wait for a dip to participate. As of now, it's a hold.
Okay. In fact, let's get in some more perspective as we wind down on this very historic week for the markets. Let's also hear it out from Manish Sonthalia as well as other market experts on what they're making of the market from here. Most of them believe that this is not it, and you are going to see further up move on the markets. And it's pretty much a consensus call that it's going to be banks which are going to be leading the next lap of the rally forward.
Obviously, if all the factors are positive, I mean, it works well if you ride the momentum. So I would believe that markets are still headed higher. And you got to do your stock picking within this entire setup, and that's how we are placed. I mean, it's a question about flows, and you can't ignore India for too long. I mean, that's the entire truth, because if the fundamentals are supportive, if the macros are supportive, both global and local, then obviously it's only a matter of time. I mean, there will be difficulty in finding good quality paper when the flows, turn positive also from the global side. So, I mean, at the end of the day, it's a bottom-up stock picking. I mean, that is how we would like to place it. I mean, there's no denying the fact that, the outcome for the next many years to come is going to be positive. But it's going to be our individual stocks.
Markets are expensive, there is no doubt about it, from a 12-month perspective. But there are investors who are willing to pay, let's say, take 3 or 4 year view, specifically even the foreign investors who are willing to take 3-4 year view. If I couple that with the certainty of growth in India, right? So then market doesn't look that frothy or that expensive if I take a 3-4 year view. I feel that large caps will also do well here from here on, because if the money comes, which it will, even from the foreigner, given the sentiment and given the overall stability, then the first round of money will come in large cap.
While the small and mid caps in general and the broader markets have done phenomenally well over the last 6-9 months, I think the large caps in general have lagged. And so I think investors want to participate. It's time, in my view, that elephants will dance. So I think there is still an opportunity in the large caps. Not to say that there is no opportunity in the small to mid caps, but I think in a bull market, there's always sector and market cap rotation.
I think large caps will do well, because it is easy for new investors, particularly foreign investors, who are looking at India seriously, not only because India is doing well, but because they are getting bugged out of shape in China. The larger cap financials is the easiest to buy. They're also a large part of the index. So even if these guys underweight, overweight, they still have to put, if not 30% then 25%, but all that has to go into the same large cap names. And within those 3 groups, which is financials, consumer, and IT, it is easiest to buy financials because they are doing well and the stock prices have not done well.
General fact that the retailers are making money across all segments. They're not limited only to equity. Gold is doing exceptionally well. Bitcoins are doing fine. Irrespective, housing is doing very well. So generally, there is wealth creation across sectors, which will generally cause greater interest in asset classes, of which equity will also be a part, because you could have a diversified portfolio. The next is the return of FIs, and I think that is going to be a big catalyst for the market. Many people make a statement that the retail is the only element in the market that matters. Retail has caused us to reach where we are. FIs will cause us to move ahead from where we are, because they will now, there's likely to be participation, particularly in the large cap names.
Okay, let's put the spotlight on Max Healthcare as well, because the company has just made an announcement regarding acquisition for one of the hospitals in Lucknow. The enterprise value of that asset is expected to be around 940 crore rupees. So let's see, okay, not reacting a lot to it right now, but 1.3% higher. But time now to get the BTSC trades out of the way as well. Naresh, what's the buy today, sell tomorrow idea?
So first is a buy on LTI Mindtree, good momentum here, stop loss at 56.70, target price of 5800. Second is a buy on ICICI Bank, stop loss at 998 and a target price of 1035.
Okay, what about you, Kunal? What are the BTSC trades?
So again, large cap names, TCS is the first stock which I would suggest as a buy, revised price of 3700, stop loss at 3600, and Kotak Bank is the other name which is confirming a breakout about 1830 mark. So would suggest a buy with 1885 as a target, stop loss at 1790.
Okay, point taken. It's only 1 minute left for the trading session, and it's been a week that has clearly belonged to the bulls. A 3% gain coming in for the Nifty, 4.5% movement. In fact, we've only inched higher today when it comes to the Bank Nifty, and we're closing in the green, even though the advanced decline ratio are favoring the declines, and the mid-cap index was a bit more tempered than the headline index. But nonetheless, this week clearly has belonged to the index and the large cap names, and those were the key winners this time around. There was a lot of comeback that we saw from IT as well. So names like TCS, Infosys, HCL Tech, Wipro, they had all seen quite a bit of gain this week. Having said that, from the broader market, it was power stocks that were doing well. So CSC, Tata Power, these were the names that were gaining. And then, of course, you also had the Adani group of stocks that were in focus. On the losing side, this week wasn't too kind on Paytm. There was a 5% cut, so a quarter of the market capitalization value of Paytm was eroded in the week gone by. Today as well, it's ended in the red. And then sugar stocks, they all took a big beating this week, whether it was Praj Industries, Triveni, Renuka Sugars, other names as well from the broader market. All of these stocks were coming under pressure. For the day specifically, well, you have to point out what was happening on the gaining side. To some of the names like GMR Infrastructure, it was higher by 12%. Real estate is also quite active. So Sobha Industries, Prestige Estates are ending the week on the green side. RBL Bank also managed to recover quite a bit, and even the private banking names actually from the frontline index, and ICICI Bank and Axis Bank, HDFC Bank, by the end of the week there were decent amount of gains to be made on all of these counters as well. Of course, there were a lot of block deals also this week, and on account of that we saw a lot of action as well. While it was about RBI this week, next week is going to be about FOMC, because that's the big cue lined up for not only our markets but across the globe as well. But for now, we are ending this hectic week. Thanks so much for joining us. It's a goodbye from me, Aisha Isba.